Hello and welcome to Money Matters. My name is Dave DeWitt of DeWitt Capital Management. My co-host is Jim Butler, CFP of Videre Asset Management.
Hi, David.
Welcome, Jim.
Good to be here.
Good to see you again.
You bet.
Yeah, these summer days, the weather this summer is kind of hot.
Particularly after coming through a winter that we thought would never end.
Yes, it was a long one, but now that we're in summer, yeah, we can forget about that winter.
Right.
That winter that we wished had never been.
Right.
So, usually when we're talking, we talk about the stock market, but why don't we talk about the economy and the metrics of the economy and what's that showing? And I see you have brought some statistics with you.
Right. So, one thing that's interesting, as recent as the conversation from this afternoon with a client, he had asked, well, how is this year going to be different than last year? And, my answer, Dave, in a general sense was, well, from an economic standpoint, it may look very much the same. Somewhat sluggish growth, meaning somewhere in the 2 to 3% range. Unemployment that I would classify as stubborn, staying in the 6.5 to 7% range, with the underemployed number being significantly higher. And just not a whole lot of excitement in the marketplace other than companies continuing to be very smart and diligent about the cash that they have.
Sure.
Last year, of course, we had record-setting returns with the major U.S. indices, equity indices.
True.
This year, I don't think we're going to see that as we've discussed. But from an economic standpoint, one thing, one research firm that we follow, I just went back to their statistics. We had, in 2012, 2% GDP. In 2013, the estimate, although the final number isn't in quite yet, is going to be about 2.5%. So a slight uptick. For 2014, again, on a best guess, estimated basis, it's expected to be somewhere in the 2.5 to 3% range. And then if we go into 2015, again, on an estimated basis, maybe 3 to 3.5%, which is in the right direction. But I kind of put GDP anywhere in the 2 to 3% range as really kind of anemic, particularly given the recession that we had going back to 2008. At this point, we should be humming along more in the 4 to 5% range. We obviously didn't come close to that.
So what's holding us back?
I think the biggest hurdle really is unemployment. It's the fact that people are not working at the level that they would either like, and that stretches all the way from recent college graduates to people in kind of going through a midlife career change. Unemployment peaked in October of 2009 at 10%, and at that time the participation rate was, call it 72%. Participation rate is how many people are actually in the job market. So what's happened is the unemployment rate has come down from 10% to most recently around 6.7, maybe 6.6, depending on when this show is taping. But again, put it close to 6.5%. So on the surface, it would appear unemployment's coming down. But guess what else has come down along with that?
Let me guess, participation rate.
That's right. So it's down around 63%.
When you say the participation rate, can you define that?
Well, I'll give you my definition, which is really, it's not going to be the technical definition that you'll get from
I want the Jim Butler version.
That's right. It's people in the workforce who are actually working in the workforce and gainfully employed. So they're participating in labor. Those folks who may have been in the workforce but stopped looking for a job, that could include people collecting unemployment benefits, but they're not necessarily looking for a job. Right. So they're not participating.
Does the participation rate take into consideration like age 21 through age 70? I mean, we're at 63% participation. What would 100% participation look like?
Well, that's a good question. I don't know the answer, but a different question would be, what would be considered full participation? Maybe it's something like 80, 85%.
Right, but the net is that the unemployment rate's going down, but the number of people looking for jobs has also dropped.
Right.
And the absolute level of unemployment or employment has moved up slowly, maybe,
right.
from pretty low levels in 2009.
And I think that's what's holding back GDP, and why for 2014. I look at these numbers and say 2.8, maybe 3% GDP growth in 2014. Okay, maybe. I'd like it to be there, but that's still not all that exciting.
Right.
It certainly
you need a little bit of GDP than 2% to make up for inflation and other drags on the economy.
Right.
You're not, to get growth, you need more than 2%. To get real growth, you need more than 2%.
Right. So how do we create that? What would have to happen? Well, I think businesses have to be willing to expand. They have to be willing to innovate, and they have to invest in different technologies in order to have a need to hire people. And in order for that to happen, certainly there has to be either tax incentives or policy in place to encourage them to do that. Our guest speaker tonight is an energy analyst, so we'll talk about that. But that is certainly one big potential area of growth,
right.
That I think could be a big boom to our economy.
A big boom. And,
sure.
I think that that'll be interesting when we get our guest on to talk about that a little bit. So in terms of the economy and the way the markets work, we've got Europe growing really slowly, and turmoil in the overseas markets. And, depending on when this show is broadcast, there could be any degree of geopolitical tension happening anywhere in the world, which tends to make people nervous. Interest rates have remained relatively stable, 10-year Treasury and somewhere between 2 and 3 for a while. You wonder what's going to take to really kick this economy into a stronger growth mode. When you mention new technologies and getting more people involved in new technologies, I couldn't help but notice some of the statistics coming about how well U.S. students score on math and science against other countries. We're like between the 20th and 30th, in terms of our scoring
world rankings.
Yeah, world rankings. Which and other people have said that we've sort of given up manufacturing. Manufacturing is sort of important for the strength of the economy. You just can't just be a spender. The areas I see where there's manufacturing taking place is with Tesla.
Right.
You know what I mean? We're making the best cars in the world here in the United States right now.
Right.
And I think that's so some things, innovation, new technologies that can really spur us forward, I think would help the economy.
No question. And people have to be willing to take risk.
Yeah.
And a willingness to take risk means that some are going to survive and some aren't going to survive. And with that comes ingenuity, innovation, breakthrough technologies.
I think you should run for president.
No thanks.
I think you'd be. It sounds like a great campaign.
Yeah.
Well, listen, we have a question that was written into us from Nancy Gates of Norristown, and her question is: what are some good hints for planning for retirement?
Well, there's a number of things, and instead of giving a textbook answer, which you can find on any number of websites or the internet. David, when we help clients plan for retirement, really it oftentimes comes down to just a few key points. When do you want to be in a position to retire? That doesn't mean they're going to retire, but when do you want to be in a position to be financially independent? Number 2, how much money in today's dollars do you want to generate from all sources in order to support your lifestyle? So if you want to retire in 5 years or 10 years, now you've got a time frame, what kind of income do you want in today's dollars? Mm-hmm. Then, what resources do you have in order to support that lifestyle? And do you need to save more? Do you need to go into a mode where you invest your money to achieve above average rates of return? Or do you have plenty of money, but your objective should be more to preserve what you have? So don't take on too much risk. Preserve what you have, because all you need maybe is a 5% return over the long term. So, those are the key things. When do you want to retire? How much do you want to have in retirement? And then what resources do you have available today that can point you in that direction? That's a good starting point.
Yeah, well, that sounds great. Well, that was a great question and a good answer, so we thank Nancy Gates of Norristown for sending us that.
Yes.
Now, if you have a question and you want to send your question to Money Matters, you can send it to Money Matters at 205 East Levering Mill Road, Bala Cynwyd, PA, 19004, or you can send your an email to moneymatterstv@gmail.com. Either way, we'd love to get your questions and get them on the air. Now we have our special guest, Bob Milnes. He's an energy analyst. Good to see you, Bob.
Good to see you, Dave.
Hi, Bob.
Good to see you.
So being an energy analyst at this time is quite an interesting place to be, and the U.S. energy situation is changing. So I think we should start with what changes have occurred in the last 5 years in U.S. energy production, both in oil and natural gas.
It's a good question. Well, I mean, to be honest, we are going through a revolution of sorts in the energy arena in the United States through a lot of what you guys talked about, some of these technology advancements happening across many industries. We've seen a lot of that right in the oil and gas industry. And, I mean, by that I'm talking about this whole process of hydraulic fracturing, or fracking as it's commonly known, on top of horizontal drilling. So basically what we're seeing in the past 5 years is this use of horizontal drilling where the oil and gas companies will drill down about a mile and then turn their drill bit a horizontal manner and go out about a mile. And they're doing this in what's called shale, and it's a source rock. And that technology improvement has really opened up vast amounts of oil and gas reserves throughout the whole country. I mean, just looking at Pennsylvania here, we have the Marcellus Shale. I mean, it's seen tremendous growth over the past 3 years. It's currently producing the natural gas equivalent of 2 million barrels of oil a day. So if you look at just the Marcellus...
What was that again?
The amount of production of natural gas that it's producing. It's such a vast amount of natural gas.
Yeah.
It's the equivalent energy content of 2 million barrels of oil a day.
That's amazing.
So we're seeing a lot of this technology.
And where was this like 5 or 10 years ago?
It was just picking up back then.
So there really wasn't much of anything.
Not much of anything. I mean, that's when it was first starting. I mean, the idea of fracking is not a new technology. That's been around for decades.
Right.
But this horizontal component has really opened up a vast supply. And it started in the Barnett Shale down in Texas. And Texas is still, I mean, they have a tremendous amount of oil and gas down there still. But we've been able to unlock new shale plays throughout the whole country. I mean, one that gets a lot of press is the Bakken up in North Dakota.
Right.
I mean, this past month they've done over a million barrels a day of crude oil. And that's only expected to grow. I mean, they project towards the end of the year they'll be doing about 1.1 million a day. So I mean, it's that type of energy development that's really driving investment to the whole sector.
You know, I can't help but at least bring up the question at some point. So now that it's on my mind, obstacles. So with the development that's taken place, as Dave said, over the past 5 years to where we are today, and who knows where we could be in 5 years, but we have obstacles. There seems to be a lot of people in particular states that couldn't be interested. They feel it hurts the environment.
You mean like New York?
New York being one.
That's one good example. Yeah, I mean, as any emerging technology or business, I mean, there's always going to be hurdles. One of the major hurdles we do see is political. So, I mean, in New York, they do not allow the hydraulic fracturing. And a tremendous amount of the Marcellus Shale actually lies right under New York. So that's a resource that can't be accessed at the moment. But what helps us get over some of those hurdles is the property rights in the United States. Because a lot of the drilling right now is being done on private land. And because of that, the landowner will benefit. So, I mean, you're starting to see a lot of individuals in the southern tier of New York really push the governor to legalize the fracking because it would be a tremendous boost for the economy down there and for the landowners.
Right.
So that would be one hurdle. I mean, other ones, I mean, one common one that we all read about is the Keystone XL pipeline.
Right.
And I mean, that is, I mean, you've got the environmental component and the political component. I mean, they're kind of joined together. But I mean, that is a hurdle that we're not seeing for most of the pipelines being built in the United States. The Keystone is creating a lot of commentary surrounding the tar sands or the resource that it will be transporting down to the Gulf Coast. So I mean, there are some environmental pushbacks on that.
So you're saying that some of the pushback on that Keystone XL is more related to environmental concerns up in Canada than it is the actual transportation of the oil through the pipeline?
Yeah, so I mean, basically the main concern is the environmental impact of the tar sands. So a lot of people in the United States do not want to see that resource produced because it could add to the carbon footprint of the world up there. So I mean, that does get a lot of political pushback.
But Canada's
the reality is, I mean, Canada is going to develop it.
And send it to China if we don't take it.
That is a likely scenario.
Yeah, that's interesting.
So the tar sands, can you, in layman's terms, just so our audience can understand it and so that I can understand it, what's the problem with tar sands? Why is that an environmental issue?
Well, it's a much more energy-intensive resource to produce. So, I mean, the amount of energy it takes to turn the tar sands into a crude oil usable product, I mean, it is a tremendous amount of energy.
Okay.
So, I mean, there is a lot of pushback surrounding that. The actual tar sands, it's a more sour type of crude oil.
What's that mean?
So I mean, there's a lot of different, there's actually 150 different types of crude oil. I mean, you have the light sweet crudes, which is abundant in the United States, heavy sour, and then just sours that we're seeing from places like Venezuela, the tar sands. So I mean, it's the crude quality that's one of the major differences.
What makes a crude a sweet versus a sour?
Well, it comes down to the sulfur content.
Is it sulfur content? Okay. How about the viscosity, or the thickness of it, or the energy?
I mean, yeah. So I mean, that's all gonna.
Is that all part of it?
The light, heavy. I mean, that's all part of that discussion.
Yeah. When I think of sweet and sour, I'm thinking more of like Jolly
Chinese
Ranchers.
food.
Chinese food, yeah. That's a good thought.
How about the production capability of oil versus natural gas in the United States?
Yeah, so I mean, currently in the United States, we've seen a lot of producers, and by producers, I mean the companies that are actually drilling and producing the crude oil. We've seen them move towards more of a liquids-rich area, and by liquids-rich, I mean you've got components of crude oil, and then these things called natural gas liquids. And basically, what natural gas liquids are is it's ethane, propane, isobutane, butane, and natural gasoline. So we've seen the producers shift towards that liquids-rich area to realize the economic benefit, because these natural gas liquids, I mean, they lift up the value of the barrel, essentially. So we've seen a large shift from dry gas, or methane, dry natural gas, which, I mean, it's natural gas, towards this liquids-rich areas.
It's interesting. How might these changes that we're seeing in the United States in this energy renaissance have a geopolitical effect?
It's a good question. I mean, just looking at the events of the past month.
Well, we're in the summertime, so we don't know what happened during the last month.
Looking over the past 6 months, I mean, we can look at Vladimir Putin making this strong, aggressive move into the Ukraine. I mean, a lot of that has to do with natural gas pipelines, essentially. I mean, Russia currently supplies about 30% of the natural gas to Europe. Vladimir Putin has been known to turn off that spigot. So, I mean, from a geopolitical standpoint, our development of our own resources and eventually the ability to export them to our friends in Europe and around the world, I mean, it puts us in a position of power, and it can weaken some of our geopolitical foes.
Well, at least we don't have to be being fed at the hands of the Mideast or Venezuela. Hopefully, we
and
can
that's
get
absolutely
off of that.
another benefit.
That makes us feel a little better about ourselves, I think.
I do agree with that. And
to,
as the production continues, I mean, there are numerous studies that do predict energy independence within the next 25 years. So that is a path that we're marching down.
Yeah.
You mean for the United States?
For the United States, and I include Canada, Mexico. So North American energy independence feels like a more near-term reality.
Yeah.
So I'll keep this question simple. Alternatives. What role do alternatives have, say, in that 25-year time period?
I mean, absolutely. A lot of people are viewing the current natural gas boom as a bridge to the future, a bridge to this alternative energy future. And I don't disagree with that. A lot of the alternatives, it comes down to economics. Is it profitable? Are those profitable business enterprises? And right now, I mean, a lot of the alternative energies are not. But certainly within the coming decades, that is an area of interest, and I mean, we're going to continue down that path.
Yeah, I think I see more happening with solar electricity being generated, and there's a push towards, I think, solar.
Absolutely.
Could be a plus.
Absolutely.
So geopolitically, if we're less dependent on foreign sources, maybe that might affect how we relate to foreign governments and.
Yeah, I mean, it'll certainly put us in a position of power. I mean, it'll help improve our economy because right now we do have a low feedstock for a lot of these manufacturing companies. I mean, just looking at, we're seeing billions of dollars invested in petrochemical plants to create plastics. Mm-hmm. Because right now we do have a feedstock advantage. And by that, I mean, one of the things used to build plastics is ethane.
Yeah.
So with all this liquids-rich drilling, we have an oversupply of ethane.
We got a lot of that.
A lot of ethane. And
Tons of ethane.
But it's creating a low-cost feedstock for petrochemical companies, and I mean they're doing extremely well in the United States.
I think I read somewhere that there's manufacturing moving from the Middle East to the U.S.
Yeah,
is that true?
Because of what we're talking about.
That's exactly correct. I mean, in fact, just in Pennsylvania,
that would help the economy.
Yeah, in Pennsylvania, Shell Chemical is looking at about a $2.5 billion ethane steam cracker. It's called, doing that just north of Pittsburgh, but. I mean, that's the type of investment that will create jobs in the local economy, tax revenues to the government, and really it's just the ability to use that Marcellus Shale natural gas.
But that would be a big investment in that community, $2.5 billion.
Absolutely.
And create some jobs.
And that would make the governor very happy.
Indeed it would. Indeed it would.
We want the governor to be happy.
Yeah.
How does, when you make, just aside, or maybe it's right on the money, if you have an ethane steam cracker, are you creating plastic with that, or what are you creating?
I mean, it essentially takes the ethane and turns it into ethylene.
Ethylene, and then what happens?
Now, that's not quite a process that I have too much expertise in.
But then they take that and turn it into plastics.
I mean, that's essentially the route it takes.
So then then you have the plastic capability, so manufacturers like maybe automotive or anybody that makes anything with plastic would want to be near or around that. So that would create other businesses.
Well, all right, so how can our our audience who are investors take advantage of this technology?
Great question. I mean, there's tremendous. If you just look at all the benefits and opportunities the shale boom is creating. I mean, you look at the chemical companies. I mean, they have that low-cost feedstock. A lot of the construction or machinery companies. I mean, there's a lot of turbines being used to produce and send the natural gas around. When we start thinking about the idea of exports, I mean, there's going to be tremendous investment opportunities surrounding liquefied natural gas, the infrastructure that needs to go into that. I mean, there's a lot of opportunities with investing in independent oil companies. I mean, that's one thing that makes the United States shale boom unique to the world, is that our smaller oil, which technically are called the independents, I mean, they made all of this possible. It wasn't ExxonMobil out there developing the techniques behind fracking, but it's these independent oil companies. So those are pretty interesting to look at. I mean, one area that I particularly like is the energy infrastructure.
Okay.
I mean, there's a recent study out that it predicted, like, I want to say $780 billion being invested in midstream infrastructure in the next 15 years or so.
Can you identify what midstream is?
Yeah, so basically what the midstream is, the easiest way to think about it is it's the pipelines and the processing facilities that are needed to get the natural gas oil from the wellhead, which is called the upstream, to the downstream, which would be the refiners and gas stations, stuff like that.
How much did you say they were going to be investing?
The study predicted it was about $780 billion.
$780 billion. That's
a lot of that. A lot of that is being invested in new pipelines and a lot of gathering pipelines.
So should an investor consider individual companies, or should they go into mutual funds or some kind of ETF?
Well, I do think there's opportunities with all three of those.
Okay.
I tend to focus on the individual companies, but for most investors, I think some of these energy-related ETFs do make a lot of sense. Some of the closed-end funds look pretty good as well. So, I mean, there are numerous ways to play the energy boom, whether through ETFs or individual companies.
I think we're talking about investing in master limited partnerships, and you can do that either by investing in them individually, or you can buy a fund that invests in them indirectly.
Yeah. So just to clarify, the master limited partnership thought. I mean, the master limited partnerships are, I mean, that is what the midstream investment is known as in the United States. They're typically pipeline companies that, I mean, they pay out high dividends. And one of the better features is that those dividends are going up every year, historically. And on top of that, there are pretty significant tax benefits that you get due to some of the depreciation shield and stuff like that.
So you're talking about the individual MLPs provide that?
The individual MLPs. And there are good ways to get at the MLP space with ETFs and mutual funds as well.
So what's the risk or the downside?
On the energy boom or the MLPs?
I'm thinking more MLPs than investing in the area that we're talking about.
Yeah. So, I mean, one of the major risks with MLPs specifically, I mean, you have a legislative risk. Because this type of investment, I mean, it's technically a partnership that you're investing in. So there's legislative risk. It's created in Section 7704 of the tax code. So anytime the government has control over something like that, that's always a risk. Some of the other risks, I mean, there's frequently headline risk. I mean, we see stuff about fracking or like some of the environmental issues that, I mean, you could put pressure on some of the individual companies in the space as well that way.
So how does we only have like another minute and a half, but I want to ask, how does the U.S. energy market compare with like the energy market like it would be in Europe or China? Why is it developing so much more quickly in the U.S. than anywhere else?
That's a good question. I mean, right now in the United States, we are on track to be the top energy producer in the world this year when you factor in oil and gas. And that's a trend that just isn't going to go away. And a lot of it is because of this horizontal drilling. It's opened up a vast array of supply, and it's really given us advantages.
We're going to be number one?
Oh, we're number one.
But
That's
you
right.
wouldn't
Nobody
be able to pick up on that by listening to the media.
Yeah.
No, you're not.
So, I mean, the energy production in the United States, it's astounding.
Yeah.
And it continues to grow.
Hey, listen, I would love to continue on this for another hour or so, but I'm getting the flashing light that we have to terminate this conversation. So what I'd like to do is say that our next show will be Pat Weldy and Richard Scheel, discussing all sorts of interesting money matters that'll be a benefit to you. So tune in next time for Money Matters. And you can also watch Money Matters on money-matterstv.com. That's MONE-matterstv.com, and look at our former shows that have been of great interest. So thanks for watching Money Matters, and as we know, your money matters. Very good.